You know, I apologize if I sound like Columbo and I just have a dog with a bone, but the one thing in this broad landscape proposal here on getting this mortgage thing through, the whole financial package through, I should say, is a mortgage provision called the Home Ownership Preservation Provision, and it has something called a mortgage modification. Let me just quote from it for you, that it requires loan modifications for mortgages owned or controlled by the federal government. Nowhere in that do I read problem loans. In other words, if you've got a mortgage that is backed by the federal government, ostensibly Freddie and Fannie backed mortgages, but you could argue all mortgages are backed by the government in one way, shape, or form, you can stroll into your lender and just say, I want to redo this thing. Am I misinterpreting that? And if so, is that a big deal? On the phone, Steve Curnutte, he's the president of Ends Bank Mortgage. Steve, am I reading that correct?
Neil, coming to you in HD telephone.
Very good.
Yeah, actually, we do need to make a distinction. The first distinction we need to make is that a government-backed loan is very different than a government-owned loan. And so we need to make sure that we're talking about government-owned loans. And if this bailout goes through, the government will own a lot of them. And you're reading that exactly right, that once the government owns the loan, they have the right, like anybody would who owns the debt, to not only change the rate or the term, but also just reduce the principal balance. And no, it's not just specifically aimed at people who are in distress or problems or foreclosure.
Well, then see, that's a big deal.
It is a big deal. Now, the other really interesting component of this that we've got to talk about is the bankruptcy. It's a very hotly contested component, which the senator that was just your guest before brought up, which he's very much against. And this is also something I think that we need to be very, very afraid of. If the bankruptcy code is modified as they want to do by sneaking this in, and remember, this is something that some people said is a deal breaker, then it will allow a federal bankruptcy judge to arbitrarily change the rate, the term, or the principal indebtedness of the borrower. Right now, remember that the bankruptcy code does not allow that. In fact, it's the only exception in the entire bankruptcy code.
I can't stress enough how big what you're saying, it has to be repeated here. If at face value we accept what you state could be the case, then that means that people who are not just behind on their mortgages, but those who just maybe want to revisit their mortgages, or they find it onerous, or they just find it a pain in the neck, could march in and redo them.
Well, actually, both parties would have to agree to it. The federal government would have to agree.
I understand that, but that is a sticky wicket, my friend. And all of a sudden now a provision that was meant maybe to address the 2 or 3% in duress now could help a lot more, which is fine, but that could be a lot more expensive too.
Yeah, and there's one other really interesting point here. I mean, remember that when Sheila Bair, for example, the chairwoman of the FDIC, seized Indy Mac, of the 740-some thousand mortgages that were there, 60,000 of them were in trouble. Now, once the FDIC took them over, they therefore became the owner of the debt, very similar to what's going to happen now with the bailout.
Right.
And they went in, and the very first thing they did was identify loans that were in default or danger, and they renegotiated them. Well, they have a benchmark for that. They try to get it down to where people can afford their payments at 38% of their income or something. But there's nothing preventing the FDIC in that case, or the owner of any mortgage in that case, to go in and renegotiate any of the terms. The real
But Steve, I want to be clear on something here.
Yes.
Then what if it's only one party? What if I go back to my bank and say, I don't like paying this much every month, and the lender goes back and says, well, Neil, tough. If I'm saying that and I'm forcing the issue, does the lender then have to do something?
No, they're not compelled to do it at all. The person with the control is the person who owns the debt. And
that's all of us. That's
that will be the federal government.
So I'm saying I owe myself the money and I don't want to pay.
Yeah. Well, in this case, you're quoting something that I think, in this agreement on principles, you're quoting something, this homeownership preservation, that I think is more political posturing than anything.
I agree with you.
Because all they're doing is, it's the people that want to appear in Congress that they're really going to protect the homeowners in trouble are placing this as if this is their goal. Well, guess what? Once they own the debt, they are allowed by law to do whatever they want to with it. They don't have to put it in a provision. And so the two pieces that I think are really interesting are, number one, it may be necessary to modify certain loans to maximize your rate of return on your loan pool. If you buy it at 50 cents on the dollar and you renegotiate it down some, you can still make money, and the taxpayers win.
Well, I tell you, Stevie, we've got a time bomb here if it's bigger than that, though. But very good reading. I'm sorry.
Yeah, and the very last thing, the worrisome part, is that in times of panic, we all sort of think that, oh my goodness, we've got to fix it, and we all dash in with these huge fixes. But this could potentially create problems down the road. I mean, one of the problems we've just done was we've encouraged people to get into houses they couldn't afford, and we've got them in loans they can't. Now we're just changing it so, we're sowing the seeds of this for 5 years down the road.
Very interesting. Steve, thank you very much.
Sure, I love the show. Thanks for having me.
Thank you. You sounded crisp in HD as well.
HD, baby.
All right.